Welcome everybody to the Monday stream, the Monday Open. Who's pumped for this week? We're probably going to find out whether the Bulls have full control of the market this week or whether the Bears can get some sneaky action in. A lot to discuss today, guys. We're going to be going through stocks, obviously the SP500, Nasdaq, the key levels for that. We've got commodities, big things happening on oil today. It just got crushed, down 5%. We've got also gold getting hit with the hammer. And really, it's a lot of, do about nothing, but also the slowing of China is the story today. Of course, there's always a news article in trading and investing. That's what makes it exciting. But what's more exciting is the levels that we are approaching, because we're basically there. And although the trend is still theoretically up, therefore you can't, unless you're being very bearish, can't really have a crack at shorting it just yet, unless you're using options or some kind of maneuverable tool like that. It's getting there. So we'll talk about all the key levels moving forward. How's everyone going today? You all going well? Did you have a good weekend? You pumped? Ready for that FOMC statement and every single one of the cronies from the Fed coming out to deliver the good news? The theoretical pivots, the pivots on pivots on pivots. That's what we're going to be doing. Joel Bryant says, turn it off and on again. In reference to the Twitter that I posted today. Remember, follow at FX Evolution on Twitter. Join us in the public Discord community or private Discord community. Plenty of great things going on. All right, well, let's get into it. Let's begin by talking about the bull and bear cases for this week. Always important to know the S&P 500. This is the one. This really rules the world in many ways. And of course, the US dollar as well. We'll need to discuss that. So we've got this downward trend line that's coming through. Now, you'll see similarities between this and in some ways, some of the stocks in the US market as well, in terms of where they would be should we hit that level. For example, of course, we always reference something like Apple at this point, and I'll load up Apple. I tweeted about this today, and I tweeted the level we come into today ahead of the market. Obviously, a theoretical downward trend line here. The problem with trend lines is you could draw it through the high or you could draw it through the body. That gives you a slightly different price. And I'm not sure what's going on with all this other stuff over here. It's from a different chart, I think. So we'll get rid of all that. There we go. Clean that up a little bit. So we're at that kind of high, but of course we could easily get back to the 180. Now, if that happened and we get back to a 180, where is the S&P 500 going to be? 4,300. So just remember, Apple is at a very critical point. We are within percentage points either way of finding out. I mean, this thing is the rocket ship to the moon and back. I mean, it's up from the bottom now, 33.38% with barely a pullback. These pullbacks have been pretty shallow. So there's a good chance that we will turn. Now, timing turnings is tough. Of course, going against trend is even worse. So if you're going to do something like that, you really need to use an option because, of course, you don't want to have stop losses in this market on these types of short positions. Let's go over here and theorize a couple of levels. And we'll use kind of like a fib retracement here just to begin with. Obviously, we hit that 61.8 fib retracement. You can see previously weak. This is the golden fib. There's also the GAN or GAN fib, whichever you want to call it, something like that kind of sits around this level. And then we could do kind of a volume profile of the whole zone. So let's just do a quick little bit of checking here. Let's load up a volume profile. And we'll use here the fixed range volume profile, which I believe you get with the premium trading view, unfortunately. I'm not sure if you get it with the standard. And we'll just run it through everything we've seen so far. Okay. And then we'll change it up a little bit just to run it through some different areas. So we'll run it from the top. Okay, and then we'll run it all the way from back over here. So we'll run it all the way back from over here. Okay, and we get some different readings. Now, depending on where you read this from, you'll either get this level, which is that 41.53, which we already know was a congestion point for it, or you'll get some zones when you go back further into around this area here, around that 43.10. I think that comes up depending on the reading. I can't remember exactly where it was now. We end up getting the POC around there. So you can see how important that 41.53 is, but you do get it. So if we run that, depending on where we're sitting at, it comes in around that 43.20, 43 kind of 30 zone. You can see back to this point here. It's because And the reason this shows, by the way, is because what it's doing is it's showing all these average prices through here. So you can see the market loves this level. It has an affinity with that 43.20-ish zone. And of course, if you look at the 43.20-ish zone to 43.30-ish zone, what would that time in with? If this thing went vertical in the next couple of days, we hit straight into that downward trend line. We hit a top in on Apple. We obviously go into that Garn level for the fib. We go past, more importantly, the 4,300. People will lose their minds if that happens. Many of you out there will be like, I am convinced the market is 100% bullish and I'm feeling the FOMO. What you've really got to do, guys, is you've got to try to get rid of the FOMO. And maybe a good example of that would be oil in 2022. Everyone was sitting there frothing. They were frothing. There's froth coming everywhere. $125. It's going to $250 a barrel. JP Morgan, $300 a barrel. Citi, $60 a barrel. You know, big differences. $300 a barrel is what the call was. And then all of a sudden, now we're sitting at 80 something or whatever it is. It just shows you FOMO never pays in trading or investing. If you're buying the stock market here and you're saying, I'm going to hold it for 2 to 3 years, well, you're probably going to be okay. It's not a guarantee. Of course, nothing is, but you're probably going to be okay. The market is bullish. Never lose sight of that, investors. Investors is different. There's trading, there's investing, there's not trade vesting. Trade vesting, guys, get rid of it. It's a few trade. Who's a trade vestor out there? I see a trade vestor. I know one of you is a trade vestor. Who put the hands up? Anyone? Now, what trade vesting is when you buy a position. It was meant to be a trade. It goes against you, and you go, "Hi, it'll come back. Don't worry. Buy the dip, guys. Buy the dip. Hodl." And then it comes back through, and you go, "Thank God." And then eventually, I know what you do. You trade vest SoFi. You trade vest Palantir. Or worse yet, Space. And it doesn't come back. Muhammad Al-Masari says, I used to trade vest all the time. Muhammad, tell everybody what happens with the trade vesting. We don't trade vest here, guys. No trade vest. Anyway, my point is that we are in the zone. These highs hold orders. There's something there. Something is there. If this zone is taken, it hits straight into a very important left-hand side zone. The volume profile shows so. The trend line shows so. We are at a risky point here to be crazy bullish person. I just want to kind of point that out. We've been bullish. We've been very bullish. The trend is not down, but we are in the danger zone. I'm not going to mince words. I believe we're in the danger zone. That's my opinion. Doesn't mean do anything. You do whatever the hell you guys want to do. But we are in my opinion, the danger zone. Because Kramer's too bullish. Everyone's too bullish. And while this could be, only a small pullback for a big rally, I don't know that. Neither do you. We don't actually know these things. We went past the 50 fib. We pulled in a lot of stats. It's starting to smell like this zone needs to be paid attention to. So key levels for the week, 43.20. Where we are right now. Obviously, the gap fill that would be in here. So we'll use the SPX so I can show you the gap fill. Gap fill will be in this area. So let me just show you that. Gap fill will be around 42.99. Obviously, we filled to the bottom of the body on the Friday action. And we have, I think it's something on last count, 7 gaps left behind. Again, unusual territory similar to March. Let's look at a couple of case scenarios for people that didn't watch the video. No one didn't watch the video. Thank you for the support, guys. Let's have a look at a couple of factors. Data is important. US put call ratios coming into this week. Previous period, March, April. Went from puts to calls. We are here, puts to calls. Not necessarily bearish, but certainly a good sign that we're at the danger zone. The bull case, not enough people have been sucked in yet. I did a poll today on YouTube. 60% of you voted you are bearish this week versus 40% voting bullish. Why couldn't you just come out and just be like, all bullish, guys? Come on. I wanted to see 80% bullish. then I would know that Wall Street's done a good job. Or you're really smart. I'm not really too sure. But yeah, look, the market loves sucking in, of course, retail traders. This is the small traders report. Small traders, not as many calls as they put in last time. Could there be more to run? Well, the trend is still up. We'll talk about where it changes very soon, or at least our opinion. Obviously, money flow, big traders starting to buy in, leverage funds doubling down on the big leverage. They're going all crazy. They're leveraging, they're shorting, they're getting wild. It doesn't mean they're correct, though. Leverage funds are pretty weak. I've just referenced this one more time for you guys. When retail traders have notoriously done this, a small move the week before, and they enter lots of calls, not extreme calls, but lots of calls, it generally calls for lackluster months of returns. That is the kangarooing market. Remember, that's what you don't want to be getting involved in if you're an investor that doesn't know what you're doing. Because, of course, the kangarooing market, you better smash your computer, throw it outdoors, and don't look at it for 6 months. That will probably be a better trading strategy than sitting in front of your charts watching this stream. But by the way, make sure that you do watch this stream on your iPad. Just don't trade on the iPad. Corporate insider buy-sell ratio. Very bullish, guys. It is, I've got to say, if I was an investor and I'm looking at this stat, I'm going to go back further and get the stat for you, even longer time period. They are sometimes wrong, but the insiders working, the boffins in the companies, the CEOs of American companies tend to be correct over the long term. Does that mean we know what's going to happen next week? Hell no. No, we don't. Do we know what happens in 3 months? Probably not from this. But do we know, do they have a good strike after a year? Over this sample size, of course they do. It's 100%. Not hard, though, because they all went up. Do they sometimes buy higher levels? Over here in 2015 and 16, they did. But still a good sign for the bulls. Breadth, of course, you cannot argue with it. I'll just bring up the daily above 200. Again, we need to keep an open mind to both scenarios. Investors and traders are different. Traders probably are sniffing the blood in the water. Investors are sitting here saying, well, do I have to FOMO in? Well, there's still good stocks at cheaper prices if you wish to get in. If you want to buy Apple right now, well, maybe it's questionable. 33% up. Coming into the worst month, and I'll share this in tomorrow's video, 200 plus years of data. And guess which month is the worst? Any guesses in the room? People saying gold has a change of trend. We'll get onto that very soon. So here is the S&P 500 stocks above 200-day moving average. Obviously, we got data back to the GFC here. You'll notice it comes down to the magical level, 14.42. Is that going to always get you the low? No. Does it get you damn close? It's not bad. Better than most stock pickers, probably. Now it's thrusting up. That means that the stocks are doing well. We have case scenario here, 2015. It got to a little bit higher, turned around. Obviously, a pullback that happened here in 2011. So there was still, even though the thrust was good, there was still a pullback. And then, of course, in the GFC, we got close to that number, pulled back, and then dumped. And there's multiple cases. But once you get past kind of that 60 level plus, they don't seem to come back. That usually means continue. And obviously, bulls will reign supreme. Let's move over here to the US 500. That is an ugly chart, so we won't use that one. We'll use this one here. And let's go and have a look at, we'll use ES futures. We'll just keep it naked on the charts right now. And we'll just have a look at what levels that we can see here. So obviously we could add a whole bunch of indicators and things. This is not the right ES, so we'll get the right ES. There we go. But we'll just talk about the key levels right now. The first one is 42.20 with the wicks. Day traders should be spotting this level. Have we changed trend yet? No. 1 hour hasn't done anything. Where will 1 hour change trend? Most likely a break of 42.20 and 4200. 4200 being the strong level created after the CPI. Now we have a gap down to 41.20. So if you're looking at this trade, you're basically looking at this stage, the buyers will sit here. If buy demand is going to come back through for the market, it will come in at 42.20, you would think. There's a possibility here, but the safer plays are down here, or 4200. If we bust those levels, there's probably still going to be a pullback. But once those levels are taken and it pulls back, the sentiment will change towards the downside. And that would actually be, crazily enough, the first downward signal that we will have had for ages. I mean, for ages and ages. But the 4100 obviously went bullish here off news. The defended zone that we spoke about a month ago. I mean, it's just been bullish, 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 bullish. There is no bearishness, but this will be where the fight happens. 4200, 4220, most likely when the Fed comes out with all of its madness later on this week with the statement, we'll probably see the true move. So there's some of the key levels that we're looking at this week. They're obviously the ones that we think are most important. Guessing it right now is probably a little bit of a guess. If you have an idea on the small time frame, good for you. But yeah, that's the key zones. Where the buyers are, if it gets underneath, the buyers become sellers most likely, and then we move towards cleaning up that first zone, which sits at 41.20. My kind of recommendation from a technical level would be maybe put in the gaps on the SPX code I would use. So SPX, put in the gaps and know where the gaps are. Mark them on your chart. I haven't done it here for you, but that's some homework for some of you guys to do if you'd like to. Thank you also to the 1,100 people joining us. I really appreciate it. Smash that like button if you do enjoy our content. We're currently down in the S&P market, 0.72%. We've seen oil get crushed. We'll talk about that soon. Let's go over to the dollar because the dollar has performed miracles, or has it? So the dollar, the US dollar, the best currency in the world. I'm from Australia. So I'm sorry, guys. It is the best currency in the world. And anyone that says that the US dollar is not the best currency in the world doesn't understand economics. The US can print unlimited money compared to any other country, pretty much. Remember, the major. Never doubt the US dollar. If you think the US dollar is going to die, believe me when I say there are many currencies that will die before the US dollar dies. Can anyone guess one in the chat? Tom Quimby says Bitcoin is better. Is it better? Cost me $55 for my coffee, Tom. I want a coffee. I go to 7-Eleven. I say, give me my dollar coffee. They say $56, man. I said, damn, dude. $56? Nah, just joking. I do love me the Bitcoin. Don't worry. But I'm not buying any coffee with Bitcoin. ain't no. I would die by Bitcoin. It would bankrupt me within days. So yes, dollar is king in the current environment until otherwise stated. And just remember that. Now, that doesn't mean just go buy US dollars and run around, but it does mean that when people are looking for safe havens, the US dollar is key. So let's look at this on the surface today. We have the crazy downtrend. We broke below, though I haven't actually trusted this break below. We are now currently bulling with the US dollar, and it's coming back to a key level that we discussed last week, where we said, okay, well, if this thing can get through, it goes even more bullish. So we had the first bullish move down here. We've broken through this, creating effectively a double bottom. We've moved the double bottom space now. So basically this A, or the double bottom, becomes B. The market has come back up to this level, and you can see it's kind of trying to reject here. So this zone being the 106.50 area, if we get through that, while I expect pullbacks to the trend line, I would expect rallies to continue to come through with this. And we have some other key zones that we've got highlighted here. We've obviously got this 107.50 area, and even the possibility of the market getting back to the 108. Now, if that happens and the US dollar continues to strengthen over the next couple of days, you better watch out on stocks, because that often means that money is floating out. Think of it like this. At the moment, money is in risk. What is risk? Well, it's indices, it's bonds, it's random investments, comic books, who knows? Could be Bitcoins, Bitnoodles, everything else. Then when it goes out, it goes, well, where am I going to go? Oftentimes it's US dollar. So that's why we watch the DXY right now. Do you always have to think that? Not really, but that's why we watch it right now. So dollar index getting towards critical ahead of the market open. So it's at kind of like a resistance. Euro USD, load that on the charts and actually type it in right. That would be good. You'll notice that that is kind of at a trend line, little trend line as well. So little kind of level for it to find some buyers. Let me give you guys the stats on retail traders here. What are they doing in the currency world? Always nice to know. They're going to get owned. 78% retail traders buying euro. So when I was thinking that euro was short during the Asian session, it was only 62%, 65%. Now 78% of retail traders are long the euro. Well, that's probably not the best play, even though it's at the key level. Pound, 73% long. You get the point. That's where they are. Move over to gold. Gold just came up, probably got liquidity then during the session. So I've kind of been negative on gold. Now, I preface this. I love the gold, okay? The gold during August, September, I do love the gold very much so. You guys that have been watching the channel now for a while would know that down here, I love the gold. I love the gold even more. I like the gold. I fall out of love with the gold a little bit. And then, of course, I will love the gold again if it comes back. Now, it's different. Trading and investing, obviously, it's something we try to balance here in the market. We saw money flow come back into gold in a big way. Big shorters turned into net buyers. But usually to get their position set, they'll want to pull that market back down, because I'm assuming retail is now talking about gold. Down here, no one wanted to touch gold. It's the worst investment of all time. And as I always state, 95% of the time gold sucks, 4% it's tradable, and 1% it's kind of cool. We could be in the 1%. So tell me this, people that read and watch online, does everyone love gold all of a sudden? I was on Twitter before, and I saw some people on the Twitters following along. And they were saying, gold's so good. What are you guys saying? What's everybody saying here? Hebert says, palladium move better than gold. Yeah, just like a riskier version. It's like silver's technically. If gold's going, silver will go crazier. Palladium, you can use that. I've got it down here. Platinum, all these other things. Maybe not platinum. I think palladium's probably the better play. So a few people love the gold. A few people saying gold doesn't keep up with house prices. It's when you own it that's important. Now, if you're someone that truly believes in the bullish move of this market, so let's say you're sitting there and you're like, hey, I missed out on everything because, I don't DCA. I don't follow that kind of, I don't know what I was doing. I went to sleep and I woke up 2 months later and the market went up 15%, 20%, whatever it is. And I missed out. Well, gold traditionally actually runs with the stock market quite a lot, but really what it does is it runs with yield as well. So if the yield turns around, that is the US 10-year goes down, gold will actually usually perform okay. Now, I'm not going to explain it. If you want to know more, of course, you can do the mentoring that we offer, and I can crap on about that for a while with you guys. But yeah, that's where we're at. So gold here is weakening. It's in kind of change trend a little bit. It hit the first level. That's why it's found buyers. It's hard to tell whether it's exactly weakened strongly here or not. I mean, obviously, it's gone through the traditional support, becomes resistance area. I'd be pressing towards, if dollar index can obviously boost, gold to weaken further and then come down here. Now, this is a super zone. What goes on here at the 1755 could be very interesting over the next couple of days. So watch these levels. I mean, obviously where it is, I can see why people tried to buy it here. It could still very easily turn around. I would have a suspicion it would based on the current technical analysis. 1755, obviously a very bullish level. Defended. Strong zone. So there's something going on here. And if it breaks through that, I don't think there's much holding gold until 1715. So they're the kind of the key levels for the week ahead. We don't have much time. Let's continue. US oil. A horror show. Probably good for the bulls, but also bad in the same way. Why is it dropping? Probably China news. Slowing economy, economic woes, not good for copper either. That's why copper is also down. That's why all of these metals and things are down. Slowing economy. Maybe the Fed's job is working. Who knows? Maybe COVID's doing whatever. I have a suspicion that China will go into a lockdown again at some point over the next couple of months. That'll become a thing. Notice today, sitting about 2,500 reported cases. Now, of course, most of you probably aren't interested in that, but I care because if you lock down a country or you lock down an area of a country, you kill supply, and that will affect the markets. It's what happened in March into April, and it's what could happen here again. You've got to pay attention to that. Remember, it's not the policy of the country you're in necessarily, but it's an important policy whatsoever to do with this bull bear case on the markets. So we're getting a new low here potentially. My long-term target, I've always said this for oil, is actually to get down to here at 60, whatever it is, 66. I don't know when it's going to happen, but obviously there's different from a trade. I don't know if I'd short this right now. It looks pretty extended in terms of how it's weakened. Probably finds a bit of relief and then maybe it turns over later. But for oil traders, I would expect some relief to come through at this point here towards the bull and the bear. Certainly a big bust off there. US 2-year, we've got to know what's going on there. Still pretty strong, 3.2% on the 2-year. This means that even though the inflation data was supposedly magical, the bond market didn't really overall buy it. Important. If this does rise coming this week, Wednesday, remember the FOMC statement, if we get a new high here and we make a new high on the stock market, be incredibly concerned, especially if we're at those other levels. You've got to start looking for the turn on the charts if you're bullish. Obviously, for investors, you don't care because you're looking at the long term. US 10-year weakening as well. Important that this drops. I have a suspicion US 10-year should be like 2% right now, but it's not for some reason. So my guess would be over the next coming maybe 12 months, while 10-year may spike first, the overall trend to me would be down. Important to think about. That makes TLT still an interesting trade. Obviously a boring trade that people hate, but TLT inverse head and shoulders here, neckline, obviously big level. Welcome as well to the 1,316 people joining us. If you can smash that like button, I really do appreciate it for all the good stuff we put out here. Hopefully you enjoy the content. Do you guys enjoy this type of content? I haven't been reading the chat as much as I usually do. But yeah, let me know. It's an intense Monday here because I think it's an intense week and an intense month leading into September. Now, I asked a question before, and I'm assuming some of you answered. The answer was the worst month over 200 years, obviously September. September is the only negative month, really, that's held at a big rate over 200 years. Back when people were just like, you know, they were just kind of traded pieces of paper and throwing them at each other. And obviously Kramer was buying tulips back in the 1700s. They still didn't like, even Kramer didn't like tulips in September. He hated them. Or maybe he did like them then. That's when he liked them the most. Kramer's all right. He's redeeming himself on Twitter, if anyone's been watching. He now posts more about his garden and catching fish and tomato crops or something than he does about stocks. Anyone been following Kramer on Twitter? You'd know what I'm talking about. He posts pictures of tomatoes. It's really funny. So yeah, TLT will obviously perform well if you believe yields will start to turn around and drop. If you think that the economy is looking crappy, the 10-year will most likely drop off that. Of course, that will further invert yields. And yeah, that is a good thing for long duration bonds. Remember, these are down pretty hard. You know, people don't quite understand how bad they are. They're back at 2018 prices. If you wanted it to go back to here, which I don't think it will, but let's just say it did 56%. If it goes back to the price it was December last year, 32%. If it goes back to March of this year, 21%. Pretty crazy moves for a very unattractive asset generally. If TLT shoots up, that means that's bad, right? I mean, for the stock market? Well, it just means the US 10 years coming down. So, I mean, look, it could mean it's bad. If the 2 year, look, you really want short duration yield to come down for your stocks to go well, which is what's happening here in the pre-market a little bit. This is economic fear starting to come through. It's not necessarily meaning that the market is going to tank, though. I still think there's a bit of buying to go in terms of each time we hit, remember, the demand levels we discussed before, and I'll do the Nasdaq ones soon. So if we go back over here to the ES for a second, you can't think that there won't be some random buyers here. Now, obviously, you want to see little turns on the smaller timeframes, guys. Have your systems in these areas, and you've got to make sure you actually price it correctly. But there's been so much buy demand around these zones each time. You can't really say, hey, it's over now. Well, you don't know that. We don't even know the damn thing turned yet. So remember, I've been cautioning heavily. There's no doubt people are fighting me here. They're saying, Tom, you said it here, 41, 20, 20 MA. I said that we need to watch for a turn. Did we get it? No. Are we still watching for a turn? Yes. Just because you think a level is going to hit doesn't mean you're correct. You've got to either have a way of triggering that, or you have to have time on your side. The only way to do it would be options or something equivalent. The chart junkie said, is there a chance with midterms that September could be bullish? I mean, there's always a chance, chart junkie. I mean, the stat that we have obviously is volatility increases, which means that VIX traders might be happy with their 19 buys if they got them or whatever else they've been buying at. August, September, October, obviously October being the pinnacle month. I noticed the media has been quiet on this. I don't know. Again, I can't watch US television, nor do I watch television, but I'm assuming based on what I'm seeing that it's quieter than usual. So that will come into full force relatively soon. Let's move over now to the Nasdaq. Let's have a look at the key levels for the Nasdaq. So here's an interesting one. The Nasdaq broke through, and obviously for some, well, for whatever reason, it doesn't want to get through 13.6 or 13.572. You'll notice over here on the left-hand side, it's the critical zone. There are orders stacked, you would think, behind this zone, stacked everywhere. The nasty bear lurks here. That's where the bear is. For the bulls to truly just, smash them out of the park, they're going to need to take it higher off here. And the Nasdaq, if I trusted the Nasdaq, say this was the SPY, and it went like this, I'd be pretty bearish if that happened. But we don't know. At the moment, we're critically at this. We obviously created the equal high kind of here on the Friday session with the wicking rejection that we got just off those highs, and we are at point critical. Do we have a turn? No. Where are we going to get it? Let's look at the 1 hour. Let's load that up. So 1 hour first time frame trend change would need to take out the lows that we have here, which would also equal these highs, so around that 13,300. So you'd be looking at weakness, ideally, into strength, into weakness. Next level, obviously, be 13,000. And the key one to turn, really, the bigger time frames, and I mean the big ones, would be 12.8. So that's the biggest one. 12.8 is the big one. That's equal to something on the SP 500. But it all starts here for the bears and the bulls. They'll probably fight around that 13,300. At this stage, still bullish technically on this. And you know, the craziest thing about this is it's still, and you're not going to like it, it's still 1.45% away from current price. So again, to be bearish here, are you able to just short this market? I mean, there are techniques around that, but geez, I tell you what, you've got to be pinpoint, and you need to recognize that when you short this type of thing, you would be in peril of losing your position very frequently. Do you buy here? Well, it's not my preference. I like to buy on these types of dips. You get these more into the structure, movement into the structure, into the structure. That's what you're looking for. Structure, support, resistance, supply, demand. I don't care what you want to call it. You want to look at these kind of levels. That's what you've got to focus on. We've got 22 minutes till the market opens here. We'll go through a few more pairs. So we've done so far S&P 500. We'll come back to that. Nasdaq, the key levels. Let's go check out the DAX for the Europeans out there. What's happening with DAX world? The DAX is coming again into a key downward trend. So again, all these markets seem to be hitting at the same time. They're all interconnected to a degree. Nasdaq at the critical res. S&P 500, who knows? Very close to the critical res. DAX, could one of the mods just ban that person? DAX here on the trend line. YouTube, if you're listening, get rid of your spam, guys. It's unbelievable. It's unbelievable. Who agrees? It's so ridiculous. One sec, I'll just get rid of this person. Error occurred. Oh, there we go. Conrad says, Tom, sorry, but you're wrong this week. Markets will be going higher this week. It's fine with me, Conrad. I don't know that the markets are going short yet. Do you? Obviously, you've picked that they're going up. That would mean further trapping. When we're talking about absolute critical level, I'm talking 43.20, man. 43.20, 43.20. Okay, we can fight there if you'd like me to. I'll fight with you at 43.20. But at this point, we're in the box area of where you've got to be careful. I think it's foolish to look, if you're a chartist and you're looking at these charts and you're looking at 33% up Apple, just my opinion. I mean, obviously, I'm absolutely not disagreeing with you. The trend is up. Why would you fight that? I agree. If you're looking at it in that surface, you've got to say the highs, the ability to take that high, the ability to hit this level, the ability for the volume profile, the ability for the fib retracement, they all correspond closely together. You just have to keep an open mind to that being a thing. I understand I'm sitting here being a little bit bearish on the market here, but that's because when it entered this area box zone, I always said I was going to be most likely looking for the turn. That's what I'm looking for. It doesn't mean that I'm closing all my investments and, you know, running off, hallelujah, look at me. No, but I'm not going to close my investments anyway. Microsoft. I love Microsoft. There we go. And any other sectors that I like at the time. But I agree with you. Green Thought said, so you will be bullish above 43.20. Well, I mean, as a trader, I will always just follow the trend and take the pullbacks and do the positioning. I think if you break 43.20, yeah, I mean, look, when you say bullish, I'm not really changing my investment criteria, which has always been this year that I believe we are not going to go into an epic hellhole crash like a 2800 or something. And I still believe that. Whatever this ends up being, whether it's down here later on this year, it's not led by land, so I'm not that scared of it over the long term. Okay, I think we can do it. Inflation. So to think, okay, yeah, you breach 43.20, Tom's suddenly bullish. Well, I'm still bullish. I just don't necessarily get into huge positioning around here towards further bull side. Like, I'm not going to go buy a bull call spread up here right now. What the hell was the point of that? Might as well burn my money. It has a chance of working out, but I don't want to burn my money. So at 43.20, I won't necessarily be like, oh, wow, this looks like it's going to come down straight away. I mean, it could continue to rally up. It doesn't really change my trading style. I'm just telling people where I think the key level is. So you just follow the trends. And again, if you're a day trader scalper, you don't really care about direction. In fact, you don't care at all. You don't care whether you're trading tulips, literally. If the tulips show you to bull buy, you bull buy it. If the tulips show you to bear bust it, you bust it down. It really doesn't matter. Just don't trade soft commodities. You get smoked. Soft commodity will roll on you, and then a twister will come through, or a hurricane will destroy the fields, and then you'll load up your account and you'll be down 10 grand, and you'll be like, damn, or 20 grand. You'll be even worse. Yeah, you don't want any of that. All right, let's move over to the crypto here. Bitcoin. I'm going to let the chat, you guys decide what the hell is Bitcoin doing? I've been so disinterested in Bitcoin, I'll admit it. I know for the crypto fans on the channel, I've been lackluster. What can I say? What is this? It's the worst. What is good about this chart? It is just so crap. Rejections everywhere every time it makes new highs. Everybody that's in it for the long seems to want to short it for whatever reason. I mean, what does the chat think? What do you guys think? I mean, Ethereum, I can go and celebrate a little bit, but this, what do you guys think of this? ZA uses the swear words, and then he says, I don't want to lose my my $10 in ad money, ZA, but I agree. No one knows. The Bitcoin, it looks disgusting. I mean, it's just rejection. Yeah, it's coming up, but God, every time it's like slightly higher, hit 25K. A lot of people have 25K as their key resistance for this thing. Obviously, we have a bit of a trend line that's appeared behind this now. So you could say that that's probably critical for Bitcoin. I mean, other than that, I mean, my Bitcoin opinion is somewhere around 900 to 1,000 days after the halving. I'll show you what I think, and then we'll get started. And I haven't really changed my opinion on this. I just think there's no real reason to do so. Bitcoin's a tough trade unless you're really small time frame. And really, the way that I understand how to trade Bitcoin is you have to get the true volume through all of the exchanges and be able to see where contracts trigger. And that will bring you the best happiness in life in Bitcoin. So let's say we look at the Bitcoin halving tracker. Now we go back to 2000. I know you can't probably see this very well. One second. Let me zoom. Well, that's not zooming, but anyway, let's just have a look here. Hopefully you guys can see it. So basically speaking, we're kind of at that point where I like Bitcoin between 900 days and 1,000 days after the halving. I like it when everyone hates it. I want everyone to hate it so much more. Just hate it. This guy gets it. Look at Sia over here. One more drop, he says. Ideally, yes, that's what you would actually want, because if Bitcoin gets to something like the 10, the 12, maybe one day I'll share my concept on this and why I think it goes there, possibly regardless of anything else. This is the level that in that zone, if you are going to spec, would make more sense to do so. Obviously, you do your own things, but that's kind of how I feel about Bitcoin. I'm pretty disappointed in this chart. If you're looking at short terms, obviously the trend line could be the real deal. It's still, I mean, it just looks hard. Let's move over to ETH here. Ethereum. Much cooler chart. Great base. People that got this one, I was probably kept sleeping a little. I slept a little bit on this one. Really beautiful volume down the bottom. Lot of effort. It was a really good base, guys. If you got that, congrats. Pat yourself. You did well. It was very nice. Now it's at the critical. I think 2000 was a very cool level. Obviously, I think the big orders sit behind here and here. So as long as it's underneath that, this just acts as resistance. It could be all over here, but it will need the stock market not to go higher. Okay. So again, Ethereum, it just seems to be leading. Big support's probably going to sit around 1755 this week. That pure wick support from here and the double wick just underneath that, 1700 to 1750 will be the critical zone, I feel, for Ethereum, sitting right in there, coming into those lows here. Something around there should be where the buyers are. Should it come down? BTC equals tulips. I think they're kind of like virtual tulips that are real. Anyway, I get salty whenever I talk about BTC because I, of course, mined it many moons ago. My $13 BTCs. I'm sure that MT Gox really enjoyed them. They're like, it was a great time. $13 BTC. Oh my God. How dumb can I be, guys? 1,465 viewers. Thank you very much, guys, for joining us. So we're down 0.61 here. Let's go through some other stuff. What else have we got? We've got Tesla. You guys like Tesla. All right. So Tesla's stuck in the two zones. It's actually up here in the pre-market, 0.46. Can we discern anything about this chart down here? Well, there's a little gap here, little bull gap. So if you're feeling feisty on the market and you think this thing's going up, obviously a nice little take in here at 923. Do I think the risk reward's there? It's not my style, but yeah, I mean, there's that. Obviously a break to the new high. I think that really exposes that gentleman before that said that I was wrong this week and the bull case comes in. You get past 950. I mean, look, 1,050 seems like the key level for Tesla. If you're trading here, you're really trading small time frames. I'm not too sure how small you need to go, maybe a 2-minute. Again, I would want to see weakness probably come down to like an 885. Previous little spike zone, previous bodies. It's not a high quality kind of position, but yeah, that's the type of thing I'd be looking for. Thank you very much, Sandola. Appreciate that. Let's talk about Tesla Harry. Yeah, Tesla Harry would have done okay. Jason says MT. Oh, no, Jason. I lost money to MT Gox, man. MT Gox, that's OG gangsters there. There's a hideous, I think it was in Japan, that exchange. Anyway, anyone that had their bit noodles, their Bitcoins on it, all the Bitcoins were gone. And then the US government sold them for money. So really, Jason, you helped support the US government. So you're actually a patriot. Is that right? because you did your part. You gave them about probably $2 million of Bitcoin. Congrats. Thank you. Mount Gox. I remember it was called MT Gox. Tom, do you like green energy stocks for investment? PBW. Let's have a look at PBW. How many minutes? We're about 9 minutes away. We'll get focused on to market again in just a few minutes, guys. We've done a whole bunch. If you want to zoom through the stream, we've got that Invesco. Look at that thin trade it's got here. So this is the basket of clean energy stocks. Obviously went down heavily from the top. Look, they're in the area where you hope they turn. And as an investment, they've got real potential to obviously rocket ship back to key levels, like $100 for this kind of ETF or just underneath. They've had times in the sun before. Like, don't get me wrong. Like solar, if you load up TAN, which is TAN, the ticker, that ticker, you know, it has runs over the years that are epic. It's like one of those things that you own sometimes and you hope you get that run and then you kind of bail out of it because all the businesses go bust in it all the time. It's a lot of very badly run businesses. So looking underneath the hood is probably very key. I'm not won over by something like Enphase's price right now. Like, look at Enphase. Obviously, that's a solar company, but look, I have them on my roof. I'm not somebody that buys into that. I think that's just a bad way of being. I don't buy into that, nor do I sell into it. I just go and look for another opportunity. But again, you look at the index for TAN, which is solar. I know people that got absolutely destroyed by this years ago. Back over in the 14 run, they got wrecked. And of course, many people got wrecked at these highs. You just got to be very careful when you buy it. Do I like it? Yes. Would I prefer a pullback now? Obviously. This would be the kind of level if you were looking for the bullishness. The good key here for most of the bulls in the markets is got to be the bases on some of these stocks. Like, look at let's go through some stocks here. Here's SE. Pretty decent volume still. Ridiculously cheap compared to where it was. Obviously, it was completely overpriced. We'll get rid of this. But it's come back to a much fairer rate. I mean, could you see this being okay over the next couple of years? Potentially. Obviously, retail segment, so it needs the American consumer. Let's look at Shop. I think Shop might have done a deal with YouTube as well, if I remember rightly. Something about making a shop store. I should run a coffee blend. Would you guys buy? We have the best coffee in Melbourne here, by the way. What if I made a coffee and I had 3 range? The scalper. That's full bodied. That's hardcore coffee, by the way. That'd be some deep coffee. Obviously, I wouldn't brew this, but I know a place that makes the good coffees. The scalper, the day trader, and the investor. That's what I'm thinking, guys. The trifecta coffee range. Samuel says decaf. Probably no decaf offered. Peter Y says, don't quit your day job. I'm telling you, Australian coffee's good, man. Melbourne coffee, it's where it's at. Shop anyway over here, very nice base. Obviously a doji at the moment, but look, you're looking at a price here. Yeah, it went down to 31. It's trading at $40. Again, big volumes. You could say it's the split. PayPal, another retail segment trade. Yes, it's gone up. Again, compared to other points, still cheap. Spotify, horror show stock. Obviously, recovering off base. Now, there's still a lot of opportunity if you think you've missed things. I mean, Airbnb just falling into the standard trap of being just the worst things to buy. 18 months later, guys, I'm telling you, always never buy American technology IPOs. Horror shows. But it doesn't matter which one you look at. That one's going all right now. These things do look like they're based. ARK-K, ARK-G, they're all down there. David says, can confirm Melbourne coffee is very good. It's pretty good. You forgot the trade vesta. That's right, the trade vesta. Also the loss maker. I'm not sure that would probably not sell very well, Kramer coffee range. I think he would sell a lot of coffee. He should sell like a hot sauce. That's what he should do. All right, guys, we've got 4 minutes. It's time to get knuckled in here on this market. So let's have a look. We'll load up our 2 faves. Obviously, we'll just compare here the SPX versus the US 500. I know I'm focusing on less individual stocks right now. A lot of you are focused in on individual stocks. My main reasoning is I don't know if we're out of the woodworks completely yet, and I think most of you guys have a fairly good handle on the stocks that you want. Of course, most of all the hypers, yes, they're based off. They're all at great levels in terms of basing. Of all the big stocks, like an Apple's probably pretty high price, and Amazon and Google, even a Microsoft aren't the most ridiculous prices I've ever seen. So let's go here. Let's go down to just quickly highlight the zones. Again, highs, 43.20 would be a big swing here this week. 4,300 critical. Just below that is where the gap fills for the S&P 500. If you use the SPX code, you'll be able to find the gap, and you'll notice it's in here. Here's our 66. Here's our 61.8 fib. We're in that box range. Just above that, we have the daily 200 sitting over here at 43.20. Lo and behold, what else is at 43.20? I'm probably going to make a video about this just so we can look at how many things are sitting at 43.20. It's madness. Are we going down yet? We don't know that. Obviously, we're bearish here in the morning off the Chinese news, which is weakening economy in China. Here's the Nasdaq. Here's the highs that we have. Here's the equal high. If you're looking bullish today, you're just going to want to see how it breaks around this zone, which will be the 13,560. I like pullbacks personally, but that's my style. I tend not to just jump in and FOMO. I come from patience kind of principle, abundance mindset. Key levels that you want to be looking at for the Nasdaq, somewhere around that probably 13,300 for buyers to come back in. So around this kind of boxing area here. If it does drop down to that, that would be ideal. Right now in the pre-market, it's doing its best job to get back up. We're only about a minute away. So let's just quickly load down here into the 5-minute chart for S&P. Current 5-minute chart has been mostly bearish. Bit of a level here, maybe. Bit of a level here for bull breaks. So that is somewhere around that 42.65 and 42.76 zone. Strong? Not really. I would like to see the market go down to the 42.20 or 4200 and find buyers here. And it's still, I repeat, is in an uptrend. There is no reason to say that we're going down. We're just in the critical zone. 43.20 will be probably where I can't resist finding the bear there, but we'll find out. Josh Slater says, trying to slow down and you think we're going to punch through a major resistance level? You don't know. So the market just opened. Trying to slow down has been on the cards for a while. There's so many negatives you could throw at these markets. That doesn't mean that it's going to do anything. Trying to make sense of stuff sometimes is difficult. Have we sucked enough retail traders in to even allow a short yet? Look at the weekend video for that. Thank you to the 1,440 people that have joined us. Appreciate that. Andre says, can you look at AMD? We'll check it out soon. Look at NKLA on the daily. Yeah, we can check that out. So Nasdaq starts strong here. Initially, just goes to about a 0.15 kind of down. Obviously, we scroll through the stocks. We've got Apple down 0.12. We have a bunch of the hypers down a little bit more. Apple's almost gone green here for the session. NVIDIA is green. What's AMD doing? Where's AMD? Do I have it here still? Need to update this list pretty bad. I don't even know where I put it. I thought I had it here. Maybe I'm blind. Anyway, we'll check out AMD in just a second. So NASDAQ relatively strong in comparison to the SPY. That will be mostly because energy stocks can't be doing well with a 4.95% down on oil. So that's pushing yields lower, which obviously helps the story of the NAS for the day. Let's go over here and load up what we've actually got moving for the session so far. I'll just give you some real-time sectors. So strongest sector for today so far is consumer staples and utilities, up 0.01. Weakest sectors, energy down 3.7, metals down 3.31, and gold down 2.85, followed by materials, clean energy, and financials. So it's mostly anything to do with metals and all the China slowdown stuff that's doing poorly. And the best two sectors still remain at the start of today so far, utilities and staples, with a big, strong kind of move here in consumer discretionary coming through, which would be the Tesla and likes. All right, let's have a look at AMD. We don't have much to report here. Obviously, that's a nice little kind of instant turn off and turn around here for the NAS early. Can the NAS make a little high here? And we just had a talk about it before. Critical zone. If you're being bearish here, what you want to do is see that take this high and then instantly reject it. And if it instantly rejects it, then you're more likely that was a false break. And of course, I like to react to those types of trades. So you want to see this reject pretty quickly here in the next 5 to 10 minutes, ideally, if it is going to be a false break. If you're not in trades, remember, abundance trading, you don't care. Could go. Always remember this. Why do you care whether the market goes to 6,000 if you're a trader or it's at 2,000? All you really want is volatility. Direction and where it goes, it's irrelevant. The problem is most people are beginners trade vestors. That is, they buy stocks, long hold them, hoping they go up, and then hodl them if they go down. So trade vesting is, I don't even know if that should be a thing. But yeah, trade vesting is the danger. Strongest sector right now is biotech. So let's just have a quick look here at bio, IBB. Consumer discretionary, biotech are the two strong ones. So we reported on this a little while ago, and it's been pretty good. Obviously, some of the members of the community here were very bullish on bio after the breakout, which is totally fair enough. It's basically hit your critical zones that we had focused on. I think bio's hit a nice level right now. I'm pretty comfortable with that zone. It was a good little resistance. NAS still on the high. Early session. You can see DAX down 0.73, so nowhere near as strong. Let's have a look at some of these requests. We've got AMD and NKLA. Haven't heard that one in a while. AMD, back at 101. Or, whenever you see these things, like say this low swing failure pattern thing, you do look at it and you say, well, it kind of looks like the market bottoms we're in. That is, I actually hadn't looked at the stock for a while, but that's pretty nice. Now, what does that mean for you at this point? Well, it kind of points towards a fairly bullish move, which it has had. At this point, you've got that 101 kind of 0950 resistance. If the NAS can hold this high today, that could push the markets through to the levels that you require for that to get hit. Obviously, you want Nasdaq to close above here, significant time frame. So far, the Nasdaq's 5-minute chart has closed above. That's not really enough to confirm this is a real breakout yet. Remember, it's the retail hour of power, guys. But you still, as a trader, you do not care whether it goes up a million miles. Neither do you care that much as a swing trader. Why would the VIX gap down today and the UVXY gap up? Probably yes, to your answer. Tesla up 2% into the resistance. Yep, so let's have a look if Tesla hit the little level we spoke about. Did it fill that gap? Not quite. Technically, it needs to get above here to fill the gap, which is the 925. So just in the resistance at this stage. Check the 10-year yield. How can we go down now? So the US 10-year yield is only down 2.29%. Still quite small. $2.772. So obviously we've been lower, August, been higher, 12th of August, been much higher, which corresponded with pretty much the lows, 3.48, 15th of June. So yes, yield's very important to watch. Let's have a look at NKLA. Somebody sent that one through. By the way, if you have good patterns that you think are really solid and you want to share them with the community for the Mondays, I wouldn't mind doing a segment where we do 5 minutes of pattern surveys submission. Please, maybe we'll do a hashtag on Twitter if you're interested in entering. Just put in Monday hashtag FX Evolution Monday stream or something. Hashtag Monday stream FX. So you put hashtag FXE Monday, okay, and then we'll I'll put them on Twitter so we can get a bit more interaction over there. So if you're interested in sharing a screen or something that you think is interesting in the community, just hashtag FXE Monday. and we'll always bring that up for now. We'll do some kind of hot streams. Yeah, NKLA. If you like this stock for whatever reason, I mean, I thought it was a horror stock, but I can see why you think it's a base. It's very similar to all those other ones that we showed before. So Nasdaq here still kind of finding problems around that zone. But yeah, this is very similar. Yes, it looks like a base. Yes, volume is okay, probably in proportion to where it's been. But all the hyper stocks are the same. It doesn't matter whether you look at probably Palantir or a SoFi or a DKNG or an SE or a Spot or whatever. They're all the same. Can we have a peek at RKLB? Rocket Lab. Oh, wow, it went $4. I'm telling you guys, 18 months. See, bugger it off. Don't buy in the IPO or the SPAC creation. I'm not going to predict or even say I know what's going on with this stock. I don't have enough information. I don't believe these types of stocks are that technical personally. They're more, if you trade them, you're more looking for false breaks on certain sides to get involved in them. More than anything else. I mean, obviously it's momentum based at the moment, very strong, coming into the $8 kind of resistance area. But you've got to be careful here in pennies or smaller stocks. XBI on bull flag. Let's have a look at XLE first. So XLE gap down. It's actually a very negative gap for that. That's an island reversal. Pretty negative. That's pretty negative on energy. If that holds the red, it's a gap up, followed by a movement in the resistance, followed by a gap down. Pretty negative. Let's have a look at one of the stocks. Okay, ZOM doesn't have it, but one of them will. Surely something has it. But yeah, that's a bad kind of position for energy stocks. Old island reversal down, not good. Do a live TikTok. Yeah, I got to get on the TikTok. TikTok. You know what actually annoys me about TikTok? I'll say this. When you first load it and it forces you to watch the video. And it's really loud. I must be getting old. It's so loud and I'm like, stupid thing. Petted on XBI. Yep. We'll check it off. Bio. Yeah, look again, kind of right at that resistancy area, getting damn close to that zone. So I think it's close enough. So here's the NAS rejecting. Now, this is a classic thing if this ends up rejecting and pulling down. I'll stay around for the next 4 minutes just to watch because it's super classic if it does end up creating like a pin. Because what happens a lot of the time is the market will swing the high. It will then reject into that after swinging the high. And then it will, as long as it follows through after, it can often be quite a negative sign for the markets. I do prefer it when it goes like this, though, and it goes market straight open and it's already been going down pretty strong. And then it just instantly reverses for no apparent reason. It's a pretty classic style position. Yeah, this is correct, Chris. Now, I will be on TikTok. I still think TikTok, I'll come around to it. I think TikTok's okay. But I will say this. We live in a world of huge amounts of computer and constantly being hit with stuff. And it does actually change our mental synapses. You should read up on it. I mean, some people think it's just hoo-ha crap, but I agree. I think it's a serious concern. I use less social medias than ever before, even though I'm on social media. I do love YouTube very much. I think Twitter has its place. I think they all have their place, but I stay away from them now. Like on weekends, Yeah, don't try messaging me. I'm not going to message back too much. Try to stay away. That's right, Tom Quimby. That's exactly what I'll be doing. Is anyone else watching TLT? Yeah, TLT up 1%. I like TLT a lot. It's a very boring kind of position. Obviously, my personal preference is the inverse head and shoulders play here, the accumulation base, the idea that if the market so far has miraculous, I mean, you've got kind of like a double whammy good for it, really. It's down a lot. That's good. It's long duration based on long duration yield. So if you think the economy is going to get destroyed, then the US 10-year will probably have to come down. So that's good for TLT. If you think we're in a recovery, then there's a good chance that yields will taper off or slow, which at least should sideways TLT. You know what I'm saying? So there's like really kind of like a few scenarios. There's an up scenario where the economy is really bad and TLT and US 10-year goes bad. There's a scenario where the Fed wins. It's kind of like a sideways scenario. And the down scenario is only if you believe that the US 10-year and yields in general have to go up a lot more. So if you think that the Fed's going to be able to push a 5% out on interest rates or a 4+, then obviously TLT would not be the pick. But from the TA perspective, yeah, I've liked it for quite a while. It's not a performer at the moment. And you get 2%. Yeah, don't forget the bonus meal deal, guys. Imagine that. You could have like 10 grand in it, pick up your sweet $200 worth of cheese, Chick-fil-A, not cheeseburgers. We do Chick-fil-A in sweet TLT money. Chart Junkie says Raul Powell is bullish on it. Quite a few big players are bullish on it because they look at it and they say, oh, it's the only thing I can see in this market where I can be less wrong. And I would agree with that. So stories for today so far is Chinese weakness coming through into the market. That's mostly hitting oil, commodities, obviously anything to do with metals, gold, whatever those other things are. Gold, if you're looking at it on the charts, has weakened a bit and it's come back up and kind of tested that 1784 support becomes resistance zone. If it does make a new low here, probably going towards the 1755 area, which is a fairly heavily defended zone, certainly one to be watching over the next session. Gold at this stage does look kind of bearish. Dollar index has been bullish at this stage. The weakness is coming in, as we talked about before. I wouldn't mind weakness to come down and then hopefully to ramp through 106.50. So be careful here. 106.50 is the key level here for it. Market early on has so far false broken. We said we'd stay around. We didn't get the pin rejection that we were hoping for here for that to be a fully fledged false breakout. So at this stage, you're just going to watch it around this point in time. If you are a bear, you're going to want to see it dump, take out the low, and then you're probably feeling a little bit better about the market going down to that next level. If you're feeling bullish, again, you have no reason to be scared yet in this market. So that's where we're at. Thank you very much for watching, guys. Hope you enjoyed the Monday stream. If you did, remember to like, comment, subscribe, do all that good stuff. If you haven't already, come and consider joining our private trading community. We present, of course, streams like this, plus even more in-depth stuff Tuesday, Wednesday, Thursday. And we've got open and closed streams, free 7-day trial link in the description below. You can join our public Discord with tons of great charts being shared, memes, all that good stuff. Follow us on Twitter at FX Evolution and probably follow us on TikTok soon. Anyway, thanks so much, guys. Really appreciate it. And you have a great session. Good luck out there navigating what is no doubt a very pivotal and tough time for traders. Placing bets each way here. It's probably never been harder this year. It was pretty easy a few weeks ago to be fairly bullish. Now it's harder, I would say. Some people would say it's easier, but really the breadth is the big bull case here. There's no doubt. You look at stats, mean, we're getting into the cases here of 65 to 70% chance plus that we bottomed on the NAS. I know a lot of people won't like to know that, but that's just stats taken over a very long time. I think stock market's sitting around 35%, so that's the S&P, and we're in an unstable time because to think that we just beat inflation, I mean, that'd be it's pretty unbelievable if we did do it that quickly. I mean, that's never been done. Remember, inflation technically has never been beaten without pushing the interest rate above the inflation rate. So in this case, you would have to push the interest rate above 8.5%. Now, that's not going to happen. And we know that that's not going to happen. So our cases here to beat inflation is really going to be supply coming back online. I think at the moment that's a tick. And of course, demand lessening and people feeling like they have to go back to work and do all those types of things. We've got 1 or 2 data points. We have absolutely no idea yet. The market is just starting to price it in. Permit Fisher, $4.99. Thank you very much, Permit Fisher. Appreciate the support. Good luck, everyone. And yeah, if you're not sure, remember, if you're not sure what to do and you don't have confidence in whatever the hell you're doing, it's probably better off you don't do it. Yeah. Focus on trying to get yourself the confidence in the areas that you're in, whether that's an investment, whether that's a trade. You know, if you don't know how to pick a stock, maybe you've got to go and look at your indices. I don't know. I can't tell you. I know Buffett says that indices do better than a lot of people out there. And that's probably very, very true. That's not my advice. That's Buffett's advice. All right. Catch up. Bye.